All right, let's go. Let's go over setting up our. Let's go over setting up our charts. Hey, Larry. Good morning. Let's go set up our charts here this morning. Make sure we're on the same page. Hey, Terrence, are you in the background? Make sure that you're on the same page on setting these charts up. So we have our LiquidityGrab supply demand lines, where they're grabbing liquidity at. Hey, George, good morning. Where they're grabbing liquidity at and where there's possible major reversals that can happen on a daily basis. So I want to do this video to make sure we're all set up on the same page first. So if I look at this session, the entire session here this morning on the S&P, we've had two reversals inside of my zones. The bottom reversal came right around 3 o'clock this morning. Top reversal came at 7:40 this morning, around 7:38. So these zones are major possible liquidity grab reversal zones. That's where you're looking for accumulated liquidity to reverse the markets inside of these zones. So let's take a look at them. We've had 3 total this morning since midnight. These are high probability reversal zones, and we're looking for a nice push in about a 10 to 12 minute window. We're looking around, right around a average of 10 to 12 push in these windows of opportunity. So if you look at, I have 3 different types of zones on the chart. Let's first go over what chart I run. I run a 1-1-30 chart in the trading room. Hey, good morning, Steve. 1-1-30 chart, 3 days back. So you can load this in, a 1-1-30 chart. And then this is indicator. These zones come up as an indicator. So I want you can put in 3 different sets of indicators, the same indicator. That is the SIM outer edge. You want to insert it 3 different times. SIM outer edge. These are the parameters, and you can stop the video, you members, to make sure you copy these exact parameters down. So we are doing a video on this so you can see it, to make sure you have the same settings that I look at. So you want to, each separate indicator, they're all the same indicator, insert it 3 times, the SIM outer edge. The difference is the trend up here. I use a SIM Rinco, the SIM Rinco Algo NT8. That's our proprietary Rinco bar type that I programmed, created. So this is our own programmed bar type, our proprietary bar type. All right, they can only get through our trading room. So you need to put that in there under trend. And you want to insert these 3 different values on these 3 different indicators. So all this is going to stay the same. The speed period, the speed candles, the ATR ticks, the second ATR ticks. Here's our 30-year back tested zone. All this stays the same on all 3 different sets of when you insert the indicator 3 times. What's going to change is the zone. You're going to put one of them as 25. You're going to put the second one as 100. And you're going to put the third one as 200. Now this is key. The 100 and 200 are deep liquidity grabs. That's when the market gets really deep. These are thicker hashes. You see the thick hash line, thick hash line. If I go back into indicator and I go down into the trail and I click on it, the 25 setting, I have them really small. The hash is number 1 because that's my smallest zone, or my shallow zone. I call it a shallow liquidity grab. My deep liquidity grabs, the 100 and 200 level. This is the 100 and the 200, you can see. I got it solid hash down here under trail 1 and 2. Scroll down. And I have it as 6 because I want to see the hashes larger on these zones, on these deeper pullbacks, because these are the ones that can create some nice movement. If you look at all the trades that's happened since we released this, these are the top zones that can reverse price for a nice potential push in the market. And I'm looking for these pushes when you get to these deep zones. I'm looking for an average of 10 to 12 point run and around a 10 to 15 minute window on average. So that's what we're anticipating to happen when you get into these zones. Now, the key is this. When you get into these zones, let's take a look at the zones here. This is all the zones that's happened since midnight that's qualified. Here's our deep zone. Here's our shallow zone. Shallow zone had a nice short from 60. It's got low as 42. It's almost fallen 18 S&P points since 740 this morning. The key for a zone to be qualified, very, very simple, is that when you come into zone, price gets into these zones. Let's look at our deep hash right here. Here's a zone right here. This is a deep zone hash. It's a 100 and 200 setting. Very simply, you must get in price, must tick inside of this zone. It's got to be at the zone or closing inside of the zone. Once it closes inside the zone, you have a high probability accumulated liquidity grab reversal in your hands. If you get a V bottom where you see a big candle that closes, opposite candle that closes after getting inside of this qualified zone, this is a V bottom. This is a qualified trade. You do not have to use a 1-130 if you do not want to. These zones will not change. If you go down to a 1-120, your zone will still stay the same. You'll just have more V bottoms or V tops possibly inside the zone. You can go down to a 1-1-5 if you wanted to. These zones would not change. You'll just get more V bottoms or V tops inside the zone. So we use a standard 1-130 because we don't want a lot of V bottoms or V tops. We want it to come down the zone, give us one V bottom, come up to the zone, give us a V top, and get the trade moving. Okay. So this is what's called a 1-130 zone with a trading hours of 24/7. Now, what I like to do is I like to use a change of trading hours. Also, I like the charts running beside each other to a Nymex 6. I'll show you in a second. It will give you different zones because fresh zones will start getting printed like right now at 8:30 in the morning. These fresh zones will print from 8:30 in the morning to 1:30 in the afternoon only. So 24/7 will print these zones 24 hours around the clock. But if I skinny this down and I look at what zones have transpired, what zones qualified, if you get into a zone and you do not get a V bottom or V top, this did not qualify. This did not qualify. This did not. It broke the zone, broke the zone, broke the zone. This one came up into our 25 zone because it gets extended. It reversed right inside the zone. This is a trade setup. So it's got a V top, 60 down to 42, 18-point potential run. This came inside the zone, did not reverse. This came in the 25 zone, didn't reverse. Came down to our 100 zone, did not reverse. So we've only had 3 qualified zones that's reversed since midnight tonight. We've not reversed in any other zones on the 24-hour chart. Now what you can do, like I said, is you can turn this into this is a blank chart, right? With my 3 zones on it. If I look at it, if you want to make it easier for your eyes to see, just put the 3 zones on a blank chart. The main setting you're going to change is the top on my Simrenko. Change it to a 200, to a 100, to a 25. The 25 is going to be these small little hashes. I put them as a 1 hash. Then my big hash reversals are going to be right here under my thick hashes right there. So it's very easy for me to see if you want on a blank chart on any market you trade, the Dow, S&P, Russell 2000, whatever you trade. You're going to see these reversal zones. Now you can see it. It really paints a clear picture. So at 8:30, I have this now trading based upon the trading hours of a Nymex RTH6. The reason being, it's going to start printing fresh liquidity grab zones right at 8:30 in the morning. So now I got a fresh zone. If it comes down to this level and I get a reversal inside the zone and I get a V bottom, that's a buy. If it comes up to this 60 to 64 into this LiquidityGrab, accumulated LiquidityGrab sell zone, that's a sell. So you can see that if you put it on a blank chart, it's a little bit easier to see, but it's the same exact setup. So if I come with a blank chart, what I educate is setting two charts up on. Let's say you're trading the S&P. Set two charts up so you can see the difference. Set up a 1-130 with a Nymex Metals RTH6. This is only going to trade from 8:30 to 1:30 in the afternoon. It's going to give you fresh demand and supply zones where these high probability reversals are going to happen. And you're going to get a lot of them during the day. This is not something where you're only going to get one during the day or two during the day. The Nymex sometimes will produce quite a few trades and then the 24/7 will produce quite a few trades. The reason they produce different supply and demand LiquidityGrab zones from a 24/7 chart and a Nymex Metals RTH6 chart is one's only running from 8:30. You can see it's printing new zones right now. From 8:30 to 1:30. I've been getting a lot of feedback from members inside and outside this room on a lot of markets. They love, love, love this Nymex Metals RTH6. It's one of the best Renko sizes that they are using right now. Why? Because they're getting fresh LiquidityGrab zones right at 8:30, and they're fresh all the way to 1:30. Then guess what? The next day, they start fresh again. And they start fresh at 8:30 all the way to 1:30. Next day, starts fresh, 8:30 to 1:30 the next day. I got 3 days load back on this. Now I run my charts 24 hours a day from Sunday night to Friday, Sunday night 6 p.m. to Friday at 5 p.m. So if your zones are slightly different, it's because when you turn on your computer, that's when it's going to start calculating. It shouldn't be much of a difference at all if you're using the Nymex RTH6 and we're all starting to print zones at the same time. But if you run a 24-hour chart and you start turning your computer off and on every day, your zones are based upon a 24-hour period when you turn that computer on. So just heads up on that. If you log in like, well, my zones are a little bit off on the 24/7 chart, it's because when you turn your computer on, it's calculating all these accumulated zones from the last 24-hour period over a 3-day period or what have you that you have in. Okay. It does not matter if the trend is up or down if you're trading these zones. These are high probability LiquidityGrab zones, Fred. High probability LiquidityGrab reversals. Now, I'm going to show you with trend on our 30-year backtested trend how you can use our automated algorithm to get in these zones with overall trend direction. If you are in Europe, use a 24/7 chart. Use our 24/7 chart, 24 hours a day, 7 days a week. You're going to catch some trades that are like this. So if I'm in Europe caught this. So Europe, you trade, I assume you trade the London Open, Fred. I assume that's the top open that you trade, I assume, correct? You trade the London Open, I assume? The London Open is one of the top opens besides the New York Open, if you're a European trader. So if you trade the London Open, that's 3 a.m. Eastern Standard Time. Look what happened at 3 a.m. this morning. At 3 a.m., look where price was on the S&P. S&P, that was a major session low. At 3:02, or I'm sorry, at 2:30 in the morning a.m. If you're trading European session, it got into my zone. It got a reversal and went from 54, got as high as 63. Like I said, these like to move 10 to 12 points in around a 10 to 15 minute window. And that went from 3 o'clock. It took about an hour to do this one, but it moved from 54 to 63. So it moved 9 S&P points. If you're a European trader, trade the 24/7 chart. If you are a U.S. trader, just come in here, put it on the Nymex, 6 because it trades from 8:30 to 1:30, and you're going to get really fresh zones during the day. The tons of feedback that I got from traders around the world, European traders, US traders. A lot of traders don't trade just the S&P. Some traders trade, the DAX. They'll trade the Russell. They'll trade the Dow Minis. They'll trade the NASDAQ futures. If you trade the NASDAQ futures, just increase your Renko size because it's a fast market. Other than that, all markets, I like the 1-130 Uni Renko. If you want it slower, go 1-135. I know that Paul was saying he's getting some good reversals. Paul, are you in here? I don't see Paul logged in, one of our members. He loves the 1-130 on the S&P. So, yeah, I'm recording this, Terrence, so you can go back on the recording and get this set up on your exact charts, buddy. I went over exactly how to do it at the beginning of the session for you, okay? So I show a 1-130 in the room. If you want to have it faster, go down to 1-125, 1-130. What it does is it lowers your reversal candle inside the zone, and that could be a smaller stop. Okay. All right. So the angled lines right here, that's because this angled line, this is a 25 setting. It's a smaller setting. And the ones that are flat line like this, these are my longer settings. I'm looking for major reversals in the market, these zones. Major reversals on these larger hashes because that's my 100 and 200 setting. My 25 setting in here, Terrence, my 25 setting, you extend it out because these are smaller settings. You extend it out. These are reversal zones. All right? So when you're looking at these, you're looking for reversals in the market. So yesterday I had a buy zone at this level. This is a 25 buy zone. Came right down to it. Inside of it, you see the green and green hash. Right there was 47 fill. High is 72. 25 S&P point move. From 12:11 to 12:16. All right, within 6 minutes, it moved that much out of my buy zone. So when you come to these buy and sell zones, when they're fresh, the easy way to think of it is this. My larger zones right here, my larger zones, my 100, 200 settings, you're looking for a major possible reversal in the market. Because these are deeper zones. These are deeper liquidity, accumulated liquidity grabs. It's trapping the wrongly positioned traders. It has to close inside the zone. Then you have to get a reversal inside the zone by looking for a move, okay? A confluent zone is this. You have my larger zone inside of my 25 zone. My 25 zone never closed below it. This is called a buy zone confluence. When of these three zones, what you're going to see is they're going to layer on top of each other. They're going to layer on top of each other. That's a buy zone confluence. Gets inside those zones, look for a nice pop. This is 75 all the way up to 92. 17 S&P point move. All right, potential move. All right, if you're trading off the smaller 25 zones, they print like this. You have to extend them out. I just put my little, you can visually see it getting inside the zone here. My dots will start printing on the smaller, shallow zones. Start printing there. That doesn't mean this zone is not active. It's an active zone. You can visually see it, or if you want to put a little eclipse around that, a little box around it. You can see my reversal zone, another trade, 85 into the close to 98, another 14 S&P point move. So those are the three buy zones and sell zones. We're going to go over the 30-year back tested zone on how you can use the automated trading algorithm with that in a second. I want to get your zones right first. If you don't get your zones right, you're not getting the possible high probability reversals, okay? So when we do these high probability reversals, the 25 zone is very simple. You'll see these thin hashes. The reason I put thin hashes on the smaller ones to differentiate the deep zones for shallow zones. If I look at my 200 here and my 100, I go down to trail and I have it all at a 6 width with a hash. But if I go down to my smaller 25, I put a 1 hash as my width, or 1 or 2 hash as my width. Why? Because I want to see the difference in my deep LiquidityGrabs, my shallow. These are shallow. They're all buys. You see how it called it, came right into the zone, called it 11 to 21, 11 S&P point move in a matter of 10 minutes potential. Here came in the zone, 11:30, 93, got as high as 20, 27 point move on the S&P, matter of 30 minutes. These zones are very, very powerful because they love to reverse price inside the zones. All right, so when you get these zones, here's another 25, reversed it. Here's my deep zone. The deep zones are where you're going to look for extended moves, though. Look how we had 2 of my deep zones here. They wanted to try to grab accumulated liquidity in this zone. They did not. It closed a couple candles outside of it. Once you close a candle to 2 candles outside of it, the zone is no longer valid. You got to come down to the zone, close or be at the zone, close or be at the zone, equal to the zone or at the zone, and close 1 candle inside of it. We got the reversal candle. This is a buy setup. This is where you can turn on the automated algorithm that we have with zone trend only. I'm going to show you how to do that after this. I want you to set your zones up. I'll show you after I turn the video off, and we'll go over how to do that. But look at this extended move. 70, as high as 98. Almost 30 S&P point move. From 950 to 1015. 20 minutes, it moved 30 S&P points. Why? Because it came out of my deep zone. Okay? When you come down these deep zones, you're looking for extended moves. My shallow zone here, shallow zone there, shallow zone there. Here's my sell zone. It still catches some nice moves, but this is what you want to look for. The deep zone reversals. Okay? These are my setting. This is a Nymex chart. I use a 1/130 Unirinco. Trading hours, Nymex, RTH6. Why? I want fresh zones to reverse price like they did yesterday. This is a very, very, very leading indicator. You knew this zone at 12:13 yesterday Eastern Standard Time. 1 hour later or 45 minutes later, you got your zone. This morning, it did the same thing. It started reversing right at that zone, right at 8:30. It came right down to it at the close. Getting reversal. Now it's printing fresh supply and demand liquidity, accumulated LiquidityGrab zones. So I'm watching for these zones. Now, will my Nymex be different than my 24 hours? Yes, it will, because 24 hours runs around the clock. You're not going to get a European buy or sell on a Nymex chart because it trades from Eastern Standard Time, 8:30 to 1:30. So if you're a European trader, you want to run the 24-hour chart, here's the trades I got so far this morning that's been qualified. This didn't qualify, broke the zone. This didn't qualify, broke the zone. These didn't qualify, broke the low in the zone, broke the zone. The only ones that reverse in the zone are these 3 zone reversals. Buy, sell, 2 sell 25s, 1 buy 200. Okay. Now I'm going to shut this video off, and now we're going to go over how we use the automated algorithm with these buy and sell zones, where you can let the algorithm get in after a LiquidityGrab, after coming out of a LiquidityGrab zone. We'll go over that because I don't want this video too long, and we'll go over that. But that's how you set them up.